What is magic about this space is we all get to own a part of the network. So whatever they do on the space is going to benefit us if we own parts of the network. That's by owning the tokens. So I don't really care. As long as I've got my stake of the network, however the network is built out and whoever builds on top of it. So what they're saying is, we like the network, we like the technology, we want to build on top of the technology, and we want to build the ability to custody and transfer assets, right? That was my hypothesis from day one, that was going to happen. It's just taken time. And I've spoken to the London Stock Exchange, I've spoken to everybody. They're all going to do it eventually. I've spoken to Dubai Stock Exchange. They're all going to do it. We've seen the European Investment Bank, the EIB, issue bonds on Ethereum. They're all testing it. So my hypothesis has been most traditional assets are about $200 to $300 trillion in market cap, whether that's real estate, bonds, equities. And my guess is this will be the same because it's going to capture a share of a bunch of that. So, 13 trillion, yeah, add that into the mix that gets us to $200 trillion of market cap. It's coming without question. The best thing is own the bloody token. You can say, well, we don't want the institutions coming in. Well, you might as well profit from it. Own the token.
Bitcoin continues to build bullish momentum, hoping that financial stability risks and sign of economic slowdown will force the Federal Reserve to pivot away from aggressive liquidity withdrawal measures. However, some observers are unconvinced that the Fed will abandon or dramatically slow the so-called liquidity tightening anytime soon and expect renewed dollar strength. Hello and welcome to Money Talks. In today's video, Real Vision CEO and macro investor Raoul updates about the current price situation of Bitcoin and Ethereum, institutional adoption in the crypto space, and regulation aspect of cryptocurrencies. Raoul also shares his outlook on central bank digital currencies as well as tokenization and NFTs.
The other one that everybody will fight over and shout at each other over Twitter over is central bank digital currencies. It's the same thing. It's just an on-ramp and an off-ramp. And once you realize that, the moment that happens, they're basically allowing all money to be transferred over blockchain rails. Right. So that means the ability to move in and out of these two worlds, this new parallel financial system and the existing system, become almost frictionless. Well, if they're going to give these wallets out to 300 million Europeans and 300 million Americans and 1.3 billion Indians, what is the probability that digital assets, that $400 billion worth of value, remains at 400 billion? About zero, right? This is how good the bet is, right? It's almost impossible to architect an outcome where over a period of time, prices are not massively higher.
Yeah,
and I know that sounds ludicrous and it sounds hopium, and but there is almost no way. We've got too far in network adoption when the central banks all said, yeah, we're going to join the party. That to me was the signal as, right, the game is won. Regulation is the noise. It's a few speed bumps en route, but it's won.
In cryptocurrencies, Bitcoin, which is the world's largest and most popular cryptocurrency, was trading about 2% higher at $19,548. The global crypto market cap remained below the $1 trillion mark, even as it was up over 1% in the last 24 hours at $979 billion. Bitcoin traded in the green in line with equities, starting the week on a positive trend. The market participants opened their risk appetite to start a new fourth quarter. Even though Bitcoin rose by a decent percent, the token remained well below its all-time highs. The volatility in the crypto market has increased in recent weeks as the market participants reacted to the rising inflation and fluctuations in the US dollar by staying away from riskier assets.
So I've taken four big bets in this space, because I think it's the best opportunity I've ever seen in my life, as I've explained before. One was investing myself with as much money as I possibly could. Two was pivoting Real Vision around this, because I think it's faster growing, more engaging, and community is the future of all business models. I then also had the hypothesis that the entire financial system is going to invest in this. So that was why I built an asset management business. And then I knew that the masses were going to come, and the masses come really via, stuff like we talked about, like, securities and stuff, trading on blockchain rails, etc. Less interesting to me. What was really interesting was the tokenization of culture. And the hypothesis is the 63, I think it was McKinsey said this, the $63 trillion of global intangibles on balance sheets around the world. I.e., what is the value of brand and culture? Well, we don't know, but we kind of know it's a lot. But then I look at the share price of Disney, and it's $250 billion. Disney's probably the largest, deepest cultural brand in the world by a long way. Everybody has a connection to Disney in certain ways. So if you tokenize the Disney ecosystem, whether it's Marvel comics or original cartoons or whatever, all of the stuff in the Disney archives, all of the legend of Disney, it's probably worth $1 trillion or two. That's the power of tokenization. So at corporate level, you are highly incentivized to do this if you have cultural currency. Cultural currency are those brands, communities that have community and culture, deep culture. Where do those tend to lie? Sports. We all know that, right? Anybody who goes to a sports game, you know how deep culture lies, how valuable that is in and above common sense, right? It's something really deep. Music is another one. The other one we talked about before is fashion. Fashion is culture. Some people don't get it. That's okay. But why Bernard Arnault from Louis Vuitton LVMH is in the top 5 richest people in the world is he understands that scarcity and status go hand in hand, and humans just desire that amongst all things. People want to be more than just a number, and fashion does that.
Many investors feel the Fed could pivot and drop interest rates as the Bank of England just did. This would trigger a large buying opportunity for Bitcoin, which is extremely bullish.
When have you ever found an institution who buys at the low? What we need is FOMO, right? Most of them, I mean, I've spoken to a lot of them. And, giants like Apollo, they're all over this space. The giants, giant pension funds, giant endowments, the big sovereign wealth funds, the Middle East, everybody's all over it. The reason they haven't allocated a lot of them have done VC first, because it's easy to get through investment committee. It's just like a technology investment. But then they've struggled with product. So, they can't invest in individual hedge funds. It's just too hard for them because, they can't do due diligence on custody risk, DeFi risk, stuff like that. They just don't know how to do it yet. It's too new for them. So, fund of fund products like you guys have built and I've built, those are going to be the kind of products that they need, much like it was for family offices. So I think they are all super interested. I know that hedge funds is the next part of the space that they will come into because I've seen this rule book, this playbook many times before. They're all doing the work on it. And you need that thing that makes them not feel like idiots, which is they need the price to go up. And I know that's stupid, but it is what it is, right? That's why family offices and high net worth investors have been much better at capturing the alpha in this space than institutions because they don't get fired.
Bitcoin buyers stepped in on Monday after the U.S. Institute of Supply Management said its Manufacturing Purchasing Managers Index dropped to 50.9 in September, the lowest reading since May 2020 from 52.8 in August. It's been a case of bad news is good news for equities, with the market treating the downside surprise to the ISM Market Index as increasing the chance of an earlier Fed pause, seen as positive for risk assets.
I've spoken to the Googles, I've spoken to the Facebooks, the Metas, I've spoken to everybody from LinkedIn to, you name it, they understand this and they're coming too. But we might be able to leverage their networks finally.
So, what do you think is the biggest hurdle in Bitcoin's institutional adoption? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.